Today, our stock analysis will focus on Acuity Brands, ticker AYI. The company specializes in lighting and building management products, and this is a stock that I've owned. And since buying in a little more than a year ago, it is up more than 50%. And we will look at my investment a little later. But let's take a quick minute and look at their financials first. For their 2024 results, we're using their trailing 12 months, shown in column N, as their fiscal year ends in August. So in a few more months, we'll get their full year earnings. Now, starting off with revenue, trailing 12 months, slightly down compared to 2023, but we'll see how 2024, the full year results turn out. And overall, not up too much since 2015, only around 40%. Then net income and earnings per share showing better results here, with net income up around 75% over the last 10 years, and earnings per share performing even better from $5.09 to $12.30, which is around a 140% gain. Next is dividends, which for the most part has been flat since 2015 through 2023, but over the past 12 months, it's slightly raised. Then shares declining nearly every year since 2015, which is what I want to see, and overall down about 30%. Lastly, free cash flow, same as revenue, with a slight decline over the trailing 12 months compared to 2023, but overall up more than 100% over the past 10 years. Now let's jump down and perform a stock valuation next. Here's the valuation setup, and we will look at a few different scenarios. But take a look in the top right-hand corner first. The net income CAGR for the last 10 years, 6.35%, while earnings per share CAGR'd at 10.3. Well, what we're going to do for this first scenario is pretty much take the average of these two numbers, but round it down. So we're going to use a short-term growth rate of 8% over the next 10 years with a 10% discount rate, and we are using a 3% long-term growth rate with a 90% margin of safety. And what that gives us is an intrinsic value of $250.51. And with that margin of safety, brings it down to $225.46. So now the stock price is trading around $248. So about where the my intrinsic value is here in this scenario. But let's look at another scenario. So rather than rounding down to 8%, we're going to round it up to 9% and see how that impacts our valuation. Now, with a 9% short-term growth rate, the intrinsic value jumps up to $271.23, and with a 90% margin of safety, brings it down to $244.11. Now, the stock was trading in this $270 range probably earlier this year, but fell back down to where it is now, around $248. Now, we're going to look at one other scenario, going to be a little more bearish on Acuity Brands. So we're going to lower the short-term growth rate now to 7% and see how that impacts the valuation. With the 7% short-term growth rate, drops the intrinsic value down to $231.42, and with that margin of safety down to $208.28. Now, it wasn't long ago, maybe a month and a half ago or so, where it was trading in this $230 range, maybe slightly higher, but it did drop down to this type of valuation. And with the stock trading around $248, which is pretty close to that first scenario when we use the 8% short-term growth rate for a valuation of around $250, I do feel that is the most accurate for valuing Acuity Brands. And at this point, I'm not going to be adding to my position, but I'm going to wait until their full year 2024 earnings results are out in a few more months and then reevaluate my position. And also, their Q4 is typically one of their better quarters. So I'm curious to see how they report in a few more months. Now, let's look at a few other data points before we move on. And the first is the PE ratio. See, 20.2. Now, typically, it does trade lower than this. On occasions, it is in that lower 20 range. But I do think you should be buying this at a PE lower than 20, maybe in the mid to high teens. Next, free long-term debt to free cash flow. You can see at 1. I like seeing under 3. So great sign here. They don't have too much debt to their free cash flow. Next, dividends. It's only grown just under 8%, and that was just over the last 12 months. Before that, it was pretty much flat for the prior years. And it does give us a dividend yield of only 0.2%, so really nothing special. I would like to see that go up a little higher. And then share count, again, during the financials, we did see that they do buy back shares, and over the last 10 years, down slightly over 29%. And then net profit margins, I like to see 10% or higher. You can see they're slightly below that. Past 10 years, 8.95%, and the last 3 years, about 9.5%. And one other data point I always like looking at is return on invested capital. Very important for a shareholder. I like seeing over 10%. We can see here they're typically in that 14% range. 5 years ago, 13%, but still over 10%. So a good sign here that they know how to return value to shareholders. Now let's move on and we'll look at my investments into Acuity Brands next. Here are my investments into Acuity Brands, which I made back in April of 2023. Haven't made any additional purchases since then, with a cost basis of $158.94. And as I mentioned, the stock is currently trading around $248. So this does give me a stock appreciation of a little over 56%. While if I put my money in the S&P 500, I'd be up just under 32%. So this investment has definitely paid off against the index. And if I take into account dividends with Acuity Brands, I would be up about 56.6%, while with dividends in the S&P, I'd be up 33.3%. So again, still outperforming the index by a good margin. And down below, you can see the overall investment, which was originally about $6,200. And with that stock appreciation, has now grown this to just below $10,000. And the 52-week average for Acuity Brands has been as low as $156 and as high as $272. Now, let's move on and look at my overall portfolio's performance next. Here's the portfolio's overall performance, and the table in the top left provides a summary for each position, and we'll look at a few of them. But first, my Acuity brand in the lower right corner. This is a smaller position, but based on how the stock has performed over the past year, really wish I made it a larger one. Next, we'll look at the home builders, first being Pulte Group, ticker PHM. In one of my accounts, it is up 123%. And with all my accounts, it is up nearly 140% since my initial purchases back in May of 2022. Then Toll Brothers, ticker TOL, overall up 82%. But one of my accounts, we can see here, it's up nearly 200%. And that was when I first bought in back in April of 2022. Then Patrick Industries, they do have a home building division. And my position here is up nearly 87%. And since buying into these home builders starting a few years ago, they've outperformed the market. And I would expect this for a few more years at least. Next, we'll move on to NVIDIA. The stock had a pullback this week, and I did buy in a few times. Lastly, we'll look at PayPal, PYPL. Recently, I trimmed my position in half. And depending on how earnings go in a few days, I might sell out of this position completely. Now, I hope you enjoyed this video, received some useful information. Hope to see you next time. Thanks for watching.